What up guys, welcome back. Today, we're going to talk about how to start day trading, how much money you need to start day trading. Also, I'm going to expand a little bit more about the PDT rule, the pattern day trader, and list the differences between a cash and a margin account. Now you decided to become a day trader. That's great news, but make sure you have a passion for the stock market. You want the stock market to be part of your life. It is not a get-rich-quick hobby. This is not gambling. Think of it as a career. Gamblers think about profit. Professional traders think about risk. Back in the day when people wanted to become a trader on the NYSE trading floor, they started at the bottom, and it took them 10 to 15 years to get to that level. Same thing with a pilot career. The first 4 years are education. Then they work 10 years as a first officer just to become a captain. And they picked a career because of their passion for their occupation, the lifestyle it instills. Advanced traders love the fact that they can work from anywhere using only Wi-Fi and the laptop, and the fact that they only work a couple hours a week. But they treat it like a business, like a career, like a job. They are disciplined. They wake up early every day. They trade every single day. They believe in failing fast so they can learn faster. And education doesn't end for them here, even after 20 years. So I don't recommend starting with a lot of money. Start as small as possible, even one share only. Remember, 90% of day traders lose money their first year, but they don't tell you that those traders are beginner traders that barely started trading a couple of months, then quit and didn't come back. They don't tell you that most successful traders have 5 to 10 years of experience. Those are the traders that didn't quit. So I recommend starting with a very small size, because you're going to make the same mistakes early in your career. Losing $500 versus losing $30,000 will still teach you the same lesson, the same exact lesson. By the way, I'm going to show you how to avoid the PDT rule, avoid getting flagged in a bit. Now, if your strategy worked with $500, then it's going to work with $30,000. The only thing that's changing is the order size. You still have the same target, same stop loss, same accuracy percentages, same P&L ratios. But since your account is compounding, the order size is increasing. Your P&L is increasing. And what you can do with $500 can be done the same way using $30,000. Just different order sizes with different P&Ls, but same exact strategy. Now, before we start talking about margin versus cash accounts, let's talk about the PDT rule, the pattern day trader. The PDT rule states that if you are trading in a margin account, keyword here margin account, then you are limited to 3 round trips in a 5-day rolling period. A round trip is the moment you buy till the moment you sell your whole position. That's 1 round trip. If you break this rule, if you exceed 3 round trips in a 5-day rolling period, then your account will be flagged as a PDT trader and limited to closing orders only. You won't be able to buy anything until 90 days, 3-month minimum, or if you deposit more than $25,000. In a margin account, if you have more than $25,000 in cash, then you can have as many round trips as you want. The PDT rule doesn't apply to accounts over $25,000. Now, using margin will also unlock leverage for your account. If you have $25,000, then your buying power could be leveraged to $75,000 to $100,000. But it also carries a lot of responsibility, and you need to be careful before you get margin call, which is the worst case scenario. If your account balance falls below your broker's margin requirement, your broker may ask you for additional funds, which could mean selling your investment, or they can even liquidate your entire account if you cannot add additional cash. Now, although margin can carry a lot of responsibility, it can also be the deciding factor between a successful trader and the average trader. For example, on a $4 stock, if you have $10,000 in cash, then your leverage is $40,000. That's buying $2,500 shares in cash versus buying 10,000 shares in leverage. Now, if you made $1 per share, that's making $10,000 using leverage. That's a 100% return. And if you use cash only, you would have made $2,500. But margin also carries risk. Look at the loss. If you lost using leverage, then you would have blown your whole account versus losing $2,500, 25% of your whole account. But now, not a lot of people have $25,000 to $30,000 to open up a margin account. And one way to bypass the PDT rule is to open up a cash account. In a cash account, you can day trade every single day. I recommend beginner traders and some intermediate traders to start trading with $500 to $1,000, a small amount using a cash account. Now, the only downside to using a cash account is that you have to wait for your cash to settle. Meaning if you use the whole $1,000 on one round trip, then you have to wait till tomorrow to trade again. The cash settles overnight. Now this can teach you patience by waiting for the right opportunity for that A+ setup, and by the time you get your small account to over $25,000, your brain already has the intuition of finding only A+ setups. Then you can do as many round trips as you want. That's when the profit will start raining in. But remember, if you are a beginner trader, there's a 90% chance you're going to lose money. So start trading with $500 only, or paper trade, which is an even better way to learn. Traders are risk managers. They think about risk, not profit like gamblers. And if there's a 90% chance to lose money the first year, lose a small amount instead. Don't go big. Think of it like you're paying for a 4-year university. Your losses the first couple years are your tuition for learning how to day trade. So start small, because you're still going to learn the same lessons whether you have a big or small account. And don't neglect the small account. There's a lot of people that turn $500 into millions of dollars. You can have a great career using only a $500 cash account. Look at this chart for example. If your goal is $200 per day, then you're making over $500 a year. And it's very possible using only a $500 investment in a cash account. Those of you who are working 40+ hours and making less than $50,000, you can start making more than $50,000 day trading starting with only $500. Remember though, it's a steep learning curve, and you need to learn to walk before you can run. 90% of day traders lose money, but just don't quit. That's the game. Even if you don't understand it, eventually you will. So, start small and grow your account to riches. And that's it for today. Thank you guys for watching. And if you think this video has helped you out, please drop a like and subscribe to the channel. Peace!